talk to us a little bit about what this potential deal could signify, this lifeline to First Republic.
Sure. So details are still emerging, and I'm learning it on the fly, as are you and the rest of the investment community. But essentially, what I'm seeing proposed is that the nation's largest banks would deposit somewhere between $25 and $30 billion of their own funds into First Republic. There's speculation that the bank has seen very severe deposit outflows over the past week, with worries about contagion spreading from the collapse of Silicon Valley Bank and Signature Bank. So the exact amounts aren't unclear, but that compares to about 40 billion of reported outflows that Silicon Valley had the day before it was shut down, and 20 billion at Signature Bank. So it's sizable, but it's unclear exactly what the current deposit picture is at First Republic before this.
Yeah, David, talk to us a little bit more about why First Republic is in the position that it's in. Obviously, it's seen a large amount of withdrawals you would expect over the last week, given the risk that came after the collapse of Silicon Valley Bank. But how we got here and why specifically First Republic?
Sure. So First Republic, has an issue that many banks had, in that it bought a lot, or originated a lot of its assets, namely securities and loans, in 2020 and 2021, when interest rates were much lower. And these are fixed rate assets, and so as interest rates have risen over the last year and a half or so, they're now worth much less, reflecting the tougher economic earnings outlook for the bank. As a result, First Republic has, assets that aren't worth, when you adjust for interest rates, as much as they are on its balance sheet. And, you're not required to mark those to market under accounting rules. But if you were, the bank would have essentially negative equity, if you adjust those and don't, make other adjustments like the fair value of deposits. So that, combined with, some traits shared with, banks that went down, rapid growth, a relatively sophisticated, chunky client base that can move money quickly, and investors are worried that what happened at those banks could potentially, and depositors are worried that that could potentially happen to First Republic as well. Banking is a trust and confidence business at the end of the day, so it's hard to get back once you lose it. But this move by the nation's biggest bank seems an attempt to shore up confidence in First Republic. If they're willing to deposit money there, the broader community should as well.
And that worry of deposit withdrawals that you were just talking about, the risks of that, and this move by these big banks, do you think that it's enough to shore up confidence in the rest of the banking system, or are you watching any other banks in particular, any areas of the banking system for more risk?
Well, it's a little bit of a tautology, but if it works, it works, and if it doesn't, it doesn't. There's a little bit of a feedback loop that people are worried is going on with some banks, that as stock prices rise, deposit outflows or fears of deposit outflows are rising, which means lower stock prices, and it can sort of spiral on itself. So, it's just a question of what will be enough to stop this negative spiral. First Republic certainly seems a focal point, but in some ways, there are worries about many of the nation's smaller and mid-sized banks. First Republic is bearing the brunt of this right now. But we'll just have to see the final details on the plan and how it's ultimately viewed by the market, and perhaps even more importantly, depositors.
Yeah, and David, to that end, because this rescue deal would help solve some of First Republic's immediate issues, but then, of course, that brings up what that bank is going to look like here going forward, given the tough economic environment that we are in right now, given the fact that there is some risk here, just given the focus that we have seen on those large uninsured balances. What do you think the future potentially looks like for First Republic if, in fact, we do get this rescue deal, and some of the changes that need to be made then going forward?
Well, the bank's in a tough situation because, with deposit outflows, you're, effectively forced to either replace them with very expensive funding or shrink your balance sheet one way or another. Most of First Republic's balance sheet is marked as assets the bank wants to hold to maturity, either securities or, or to an even greater extent, loans, particularly mortgages. So, if the bank is, seeing sizable enough deposit outflows, it's not able to fund them with other liquidity, and it's forced to sell these assets. It has to realize, very, very large losses that'll hit its equity. So, any other liquidity it can find, basically, whether it's taking on deposits from the largest banks or attempting to borrow against various facilities with with the Fed or Federal Home Loan banks. That's really important for First Republic to make sure that the outflows don't stem that highly. However, the more cheap deposits it's forced to replace with expensive funding, that's just going to compress what's already been a tough earnings picture over the next year or so for First Republic.
David, I'm curious to get your perspective on this because there's been lots of talk about the interest on uninsured deposits in the wake of the collapse of Silicon Valley Bank. Social media's role in all this, just spreading the information, kind of causing that mass panic that we have seen play out among some of the other regional banks, namely First Republic here. How much of that do you think, in terms of social media, played into this and caused some of that panic that may have been an overreaction?
Yeah, I mean, information certainly spreads a lot faster these days with social media. And I think particularly when you're dealing with banks that have very concentrated depositor bases like Silicon Valley and Signature Bank in particular, if one client is thinking about moving money, that just makes it all the more likely that similar clients will be looking to do the same. So, First Republic, certainly isn't nearly as high on the uninsured deposit list as Signature Bank or Silicon Valley, but it is a little bit higher than average, and I think that's certainly playing into fears.